Good morning, people. Welcome back to another quick episode here of just Pretty Financial. We're going to look at the markets real quick and figure out what is going on today and this week, and will we see anything worthwhile? So, strap in. It's going to be a nice, quick, fun 10 minutes here. So, if you like the video, please hit the like button or subscribe, leave a comment, trying to hopefully grow this channel this year and enjoy it. We're going to enjoy it along the way. So, right away, we're going to talk about the economical data. As you can see, Monday and Tuesday are gone. We had decent data, nothing I would say was terribly negative or terribly, crazy, nothing too bad the prior couple of days. So far here, Wednesday, it's 8:20 in the morning a.m. almost in Eastern time. We have an ADP employment change coming out. Actual 77, previous 183. So these things you got to be aware of these. The MBA mortgage is coming down. Mortgages are beginning to fall, which is nice. We can open that and look at that quick. And we're hoping to see mortgage rates decline even further this year. Would love to see this back into the 5 and 4%, which is possible. We were on track in September. The Fed did a rate cut, caused everything to go the other direction, possibly now into stagflation. And now, of course, Trump has been elected. This all weaves together. All these things mix together. The market is not a linear um, one piece of data fits all. There are several factors always working together. So now we're seeing it coming down, and Trump and Scott Bassett are, I think, leading the charge to force the Fed into more and more rate cuts to lower this down, so that they can then refinance um, the trillions of dollars of debt that's due this year, and that all hinges upon the 10-year Treasury note. So just be aware of that. I'm hoping this comes down even further to 5, possibly 4%, and we'll see more data today. A big one is going to be the IS services PMI. This is a big one. I would hold off on any orders before or after 10 o'clock. You want to see what this is going to look like, and then down below here, you got a few more ISM data sources coming out, and then yeah, some oil, some gasoline, and then this Fed beige book could be interesting too to see what people say about the business place. Then beyond that, Thursday is more data, some good things in there. Definitely keep an eye on these things. Jobless claims is a big one. Non-farm productivity, I like that one. And then the 15-year and 30-year mortgage rates again. A few Fed speeches. And then Friday is, I would say, the biggest day this week, especially with Fed Chair Powell doing a live Q&A. Always a possibility of him being hawkish or dovish and saying things he shouldn't say. So all in all, it's going to be a crazy week. That's the short economic data. How do the markets look currently in the pre-market? We have in the Americas, go to US real quick. We have some changes going on here, some negative, some green. Um, yeah, it's been a crazy week already. Let's come over here real fast. This might be a better way to see what's happening in the broader markets. I want to begin just by looking at the VIX. Yeah, volatility is up a little bit again, so stocks will probably be down, especially growth stocks. So it's been a volatile past month for sure. This kangaroo market we're in, it's not a bear market or a bull market. It's full on kangaroo, up and down, bouncing all over the place as the volatility has been spiking and spiking for the past many months. You can see these big spikes. These big spikes correlate to sudden drops of market value, and this is a growing trend we've seen. We've been tracking this since early February. So be aware of this. This is where you see problems in the overall market. That's year to date. Again, you can see the volatility increasing quite a bit there. I would say sustained volatility. It's not a sharp up and down like we saw here in Christmas Day, or back here on, that'll be, yeah, I was going to say August the 4th. No, rightly, that's going to be August the 4th. And we're having a bit of a record high here of volatility, and it's spiked up yet again. So the VU is currently green in the pre-market 531, but it's anyone's guess as to where this goes in the kangaroo market today. up and down, sideways. It's going to be a bit of a roller coaster this week until we see more of that data. The market does not, in my opinion, believe that we're in the clear. Far from it. The market is reacting quickly to impulses. This is the past 1 month on the VU. As you can see, ups and downs quite a bit, but predominant narrative is it's going down. We're still green for 6 months. Now, I'm telling everyone I talk to, I'm almost tired telling people this. Um, there it is. For the past 6 months, we are up significantly. So really all that's happened is the market has taken out what I'm calling the election bump, the rally from really September onwards here. So I think we're getting back to normal ranges here. Can I mark this? We'll go to like here probably. Yeah, right there. So this is being eliminated right here. Back to September time frame. But even before September, you had this high and low right here. Remember this one? And then you had a pull up again to here. Yeah, then another drop down like to here would have been. And then the pattern just kept going. This run up and fall, run up and fall. But we're seeing more of a flat line, of course, seeing more of I guess the best word to use is stagnation. It's fear, it's inflation, it's tariffs, it's recession. Nobody wants to say these things loud on the media, of course, but that's what we're seeing. And let's go back to the 1 month real quick. Let me get rid of that. So here's your 1 month chart. You can see this incredible decline. Where's the all-time high? Yeah, I think that's it right there, February. Okay, that's their all-time high there. Down to like maybe here. So there's your drop, significant, right? As you can see. So all these things we have to just be aware of. Just do an info line on that, maybe. There you go. So significant points of a drop. Things are not. Let me do the arrow. What's magic? No, that's annoying. Get rid of that. Give me the arrow. Okay, so yeah, you can see that drop right there. 7% since all-time highs, getting close to correction territory, recession territory. And that's just the VU, of course. Then you have the QQQ, likewise, is behaving similar. All these indexes are arguably behaving similar. So yeah, I'll be dollar cost averaging in when I see opportunities like today, this week is a good one. Here's the Bitcoin. Bitcoin is, I mean, it's crazy, right? So you had this low here, February 28th. Goes all the way back to November 24th. Again, the election bump, as we're calling it. But Bitcoin has not taken off to the moon. It's not over $100 yet. It's been under $100 as of what, February 24th. So like 2 weeks now, 10 days. And it's staying on this. It right up here, didn't even test back over to $100, but it is over this 200-day moving average. So where is Bitcoin going to go? That is a question. We're currently almost over $90,000. Can it maintain that? Will it find some sort of support, some sort of resistance? It's over the 1 year 200-day moving average. It's in this land here, so it has got room to go up. Could it test back down and fill the lower 70s? It's possible. But yeah, it's game on basically. And then finally, we'll look at some of our favorite Mag 7s real quick. Tesla. I think I prefer this view for the YouTube videos. Tesla is 274 green in the pre-market, past 1 month down 30%, 32%. Is this a buying opportunity? It depends, right? It depends highly upon what you're looking for. Just bear in mind it ramped to $480, which is an incredibly ridiculously high valuation with forward guidance. It's currently down 1 month by 30%, yearly at 30%, past 6 months, 21%. The past 1 year, it's up 36%. So be aware of that. It's up 36% in the past 1 year. And if I go back to 5 years, this is what's crazy. Tesla 5 years ago, you would you still would be technically, if you bought here, you'd be underwater. So the amount of growth Tesla has had, it's still at these levels. So yeah, I mean, there was talk last night of Elon Musk and Trump doing a stimulus for, no, sorry, not a stimulus, a incentive to make it tax deductible for, I think it was the interest on cars that you buy that are American made. So Tesla got a bit of encouragement last night from Trump's address to Congress. We like Tesla at this levels. I personally would like to see Tesla down a bit lower to really signify a nice buy in the 250s perhaps. But yeah, keep an eye on that. The rest of the Mag 7, few red, few green in the pre-market. Nothing totally crazy going on. Nvidia, I suppose, is the most popular one, right? It's taken a huge bit of a beat this past 1 month as well. It's beginning to slow down with its crazy hyper growth and demand, but could be a good buy in the $100 range. We might not see it lower than that because it's been a while since it was below $100, May of last year. AMD's getting a lot of love to be the next big rival to Nvidia, so keep an eye on AMD. We like it too. It was under $100 there for a hot beat. People did buy in heavily. It's down a lot the past 1 year, 50%. So if they can really get their next gen chips flying, this thing could really advance the next couple of years. So I'm keeping an eye on AMD. MSTR up in the pre-market, of course, because of Bitcoin. PLTR, Palantir. Yeah, it's retraced nicely from its all-time high. It's still very highly valued, of course. Its metrics are pretty stinking ridiculous. Highly profitable, incredible technology, but still you're talking about a very aggressive price to earnings ratio. It needs to really perform at an incredibly high level to maintain this level of growth. So yeah, keep an eye on these things. Do your research, understand what you're buying into. This price to earnings is off the chain right here. And then Hood, tune in tonight for the $1 million Bitcoin giveaway. Back up to 46. Pre-market is green a little bit, which is nice. But we do like Hoodie. It's one of our favorites. And then SOFI. Where is SOFI? You're down again into the 1320s. So maybe another chance here to buy in the low 13s before it might run on, especially with lower rate cuts coming too. Could benefit SOFI quite a bit. And we might finish the year of 2025 with SOFI hopefully being around 20 bucks or more, because so far it is down. So hope that helps. Keep an eye on the marketplace, guys. Don't be panicking. Don't be running in whenever people are scared. And remember, always check your fear and greed index. We are currently at a 18, updated March the 5th, 812. I believe it was lower than that a minute ago, if I remember correctly. I checked it this morning. I think it was lower, like 15. So yeah, we are seeing very low buying pressure, seeing a lot of fear. People are obviously quite scared, and they should be right. Tariffs, inflation, recession, the Ukraine war, Zelensky and Trump fighting. I could keep going. COVID-19's impacts from the stimulus, Russia being cryptic, and China threatening war of any type. So a lot of stuff geopolitically and economically in the air that you want to be aware of. So, but again, our strategy is long-term vision, buy and hold. These are gifts to buy in. If you want to build a strong baseline of your portfolio into index funds like the VU, the QQQ, the VIT, these are all good tickers to buy and hold, and hopefully have your foundation built in these things to be very strong. You don't want to be exposed to super high growth companies because they're all getting absolutely wrecked. They haven't got the profitability or the strength to maintain long recessions or down economies. whereas big index funds do. Even big Mag 7 will survive big downturns. So be smart, be wise, and yeah, hold on to your dollars. That's it. See you guys. Bye.